Well, let's talk about the first stock here is Amazon, which is the world's leading online retailer.
And as you know, we talk about stocks on hot stocks by descending order of market capitalization, which for the newbies means the value of the company, you know, the total value of all of its shares in issue. So the fact that Amazon is at the top tells you this is the most valuable by far of all the companies in this space.
And this is obviously a major player in web hosting. It reminds me of this trend towards platform businesses. Where you can basically get everything that you want on one platform.
I mean, Amazon is an incredible competitor. $446.5 billion worth of market cap.
Trading on an infinite PE.
Ah, shame, it didn't make profits again.
And pays no dividends.
Dividends, what are you talking about?
But look at the share price graph. But wait, have a look.
So it was above $1,000 a share. It slipped back in recent days to 964, but you shouldn't feel bad for shareholders other than those that bought it last week Wednesday, because it's basically been up almost every day for the last year, and it didn't do so bad in 2016 or 2015 either.
But can I be the voice, the naysayer on the show today? And that is there not something to take into consideration? Go back to the dot-com boom. And the valuations that you were seeing around the blue sky elements. Are we not seeing a similar trend in these stocks?
Well, you know, Amazon is interesting because of all of these stocks, it's the one that's least concerned about making a profit now. Jeff Bezos, the CEO,
of course, because that's not why you run a business anymore.
He just aggressively drives into every category. I read an article recently where they're building bigger warehouses in order to sell things like mattresses, motor cars, all sorts of stuff like that through the website.
I mean, ultimately, he must be wanting to make a profit somewhere in the future. You can't.
Correct. And part of what has driven that
money.
Share price improvement has been that Amazon Web Hosting, which is a business that basically provides the online infrastructure for other people to host their websites, has become a major revenue driver for them, and that's kind of got things going. I mean, as a matter of total anecdotal irrelevance, Vestact, our business, just switched the hosting of our website away from a machine that we actually owned to Amazon Web Services. The cutover is busy happening over the last few days.
Yes, that is totally irrelevant.
It's going to have a major impact on the next quarterly numbers.
We own Amazon.
We do, and we've done
US portfolio.
Really well out of it. But look, it's just very dominant in countries where there is lots of courier delivery service. It's ubiquitous. People sometimes getting 2 or 3 deliveries per day. They've been a big push into household items, obviously, and even food.
You wouldn't give up this stock for love or money?
No, I really think it's going to grow because remember, online and retail are still in its infancy. I didn't put that very well.
Are still in their infancy.
If you take the total retail sales and you work out what's being done online, it's still somewhere in the region of 10 to 15%, depending on which part of the world you're in. Here in South Africa, it's like 2 or 3%.
So you say the opportunity for growth is absolutely enormous.
Big. It's so much better. People prefer it. You don't have the issues with do they have stock. You don't have to drive to the store. They come to you. It's
just
wonderful.
To adhere to the formula of our show, hot, not hot.
Hot for sure. I think it's a must-have. And now that they've slipped below $1,000, what a wonderful buying opportunity.
High conviction, go in and basically accumulate.
Must be. If you don't own those in an international portfolio, you're mad because it's the future of retail.
We've got you.